Hi friends, this is John Kingston from JR Trading Zone. Welcome to this new video. In this video, I am going to discuss about few golden rules which we have to follow in trading. Plan a trade and trade a plan. But actually execution is more important than planning. Planning will be when you come to the stock market, when you enter to the stock market, you learn something from here and there. You build up some strategies, but how many people are sticking on to it? How many people execute it properly? That is the matter. In stock market, we will say patience is important. In trading, patience is important. So always we can say we should plan the trade and trade the plan. It is easy to say like that, but the execution is difficult. Why? What are the hurdles that does not allow us to plan the trade and trade the plan? We can all plan the trade, but we will not be able to trade the plan. What are the hurdles behind that? That is what I am going to discuss in this video. Because I always say in most of my videos, if you bring 1000 rupees you can make lakhs. If you bring 1 lakh rupee you can convert it into 1 crore rupee. This type of videos I am not going to make. Okay, if you are that person, want plenty of money within few months or few weeks, or you have to double your money, please don't watch this video. I am telling the facts of stock market. If you are a pure trader, a disciplined person, if you are a good personality, and if you have the patience to learn, you can continue watch my video, because I am not going to talk anything like that. You can make, or I showing the screenshots, making manipulations in screenshots, showing big screenshots for getting views and getting subscribers. I am not going to do anything like that. Okay, that's what I want to say about me. In trading, stop loss and target is very important. Stop loss and target should always be planned before entering the trade. This is what we say, plan the trade. If you are having a particular strategy, you should know where to enter and where to exit. But most of the people who enter into a trade are like Abhimanyu. Do you know the character Abhimanyu in Mahabharatam? Actually, he was able to enter the Chakra Vyuham, but he was not able to get out of it. Entering is very simple, but where to exit or where to take our profit is very difficult, and we have to make lot of studies regarding that. Plan the trade and you trade the plan. We can simply say in one line, what is the planning and how should we execute? That is I am going to talk in this video. That's what I want to talk in this video actually. So first you have to fix your stop loss and target before entering the trade. Always professional traders are more concerned about the stop loss, because only the loss side can be controlled by us. The profit side is not in our hands. If you are coming into the market and if I want 10,000 rupees today, I want 20,000 rupees today, or I want 1 lakh rupees today, you can't fix a target. You can fix a target only on the SL side, stop loss side. I am not going to lose more than 5,000 rupees. I am not going to lose more than 10,000 rupees. This is what you can determine. This is in your hands. So SL can be determined by you, but target is not in your hands. Then how to enter a trade? First, SL you are fixing an Excel, the stop loss should be small. The target should be double of the stop loss. Only if you are seeing a trade, you are going to enter. The third important thing in stock market, doing numerous trades. They come to the stock market from 9:15 to 3:15, they will be continuously taking positions, again and again they will be taking positions here and there, doing overtrade. Overtrade is the main mistake in stock market. If you come with a plan, you should have a plan how many trades should you take, how many trades to take, or how many trades we can plan for today, or what is our system. 1 month how many trades should I take? 1 or 2 good trades are enough. Sometimes you don't get the chance of trading. Okay, I mean, if you are a buyer, you don't get the momentum some days. If you are a seller or options are like that, you will see heavy momentum and you will not be able to sell options or do trades in your strategies. There are few days which will be very favorable for you, and it's enough for your trading to be a good trader. Okay, 50% win rate is enough to become a profitable trader. I will show it with max. It is max 50% trade win ratio with proper risk reward of 1:2 is. So when we talk about the risk reward, 1:2 risk reward is minimum in stock market. Without the risk reward of 1:2, never enter into a trade. The SL should be very small and the target should be at least double of the SL. The fourth thing which I have to tell is, don't go behind indicators, that is lagging indicators. Don't follow any lagging indicators. Close your eyes to lagging indicators because they always generate wrong signals. If any lagging indicator will mislead you, so always try to read the chart and patterns. Okay, that is more powerful than any leading indicator, than any so-called lagging indicators. Okay, leading indicators we can follow. We follow CPR, pivot points, what we say volume analysis, then support, resistance, demand zone, previous day high, previous day low. These are leading indicators. But all other indicators which you get in your broker's terminal are lagging indicators, and never follow any lagging indicator. Okay, always people ask me, how much capital do I want to enter stock market for trading? The only reply I will give is, which money you can afford to lose in stock market, bring the money as your capital. Never borrow money from anyone for the purpose of trading, because always your mind must be free. It is a psychological game. Your mind must be free. First your mind must be free and you should have a pleasant mind for trading. You are planning a trade, there is only a probability of winning. Everything is okay, patterns will be right and everything will be okay. When you plan a trade, you can just see it only through the probability mindset, and you should only see it through the probability mindset, because it may go wrong. One trade is enough to wipe out the capital if you are not following the position sizing, money management and everything. One trade is enough to vanish the capital. So always you should be ready. If this money is lost in stock market, no problem. This money is for the stock market, no problem. If you have that cash, you can bring into the stock market. It is for investing and trading, for everything I will say it is the same. When your mind is free and you can get discipline. If you are disciplined, your trading also will be disciplined. Your system will be disciplined. If you have a disciplined system of entry, exit, number of trades and everything will work in your line. Okay, so I always say trading is more, and we have to practice and work in our psychology. The strategy is okay. We should always have strategies. We should know about the patterns. We should know about the chart patterns. That's all okay. I don't disagree with anything. But more important is the psychological presence and how we are approaching the trade. Trade may go wrong. Have one thing I will say, if you are a novice trader, if you are not experienced trader, and if you don't have a plan, mostly what will happen, you will keep a SL, you will keep a target. When the trade is going against you and coming and touching the stop loss, you won't let it to touch the stop loss. You will move the stop loss again. You will be going downwards to exist in the trade. When the trade is going in favor of you, you will go and book the profit even before it reaches the target. This is because there is a psychological thing behind that. Most of the time your stop loss gets hit and the trade will go again in your favor. You are taking a long position in the market. You are keeping a stop loss beyond some CPR or some demand or supply zone, everything. Okay, everything is fine. You took a trade, you planned a trade, everything is okay. But most of the time, the market will go in your direction, just one or two candles. It will dip, come and touch your stop loss. If it goes down, okay, your mind will be satisfied. But you know, it will hit the stop loss and just reverse and go in the same direction which you already planned. The trade will work in the same direction. Hit your stop loss, you are out of the trade, the trade will go on the same time. But next time when you enter the trade, when the candles are moving towards your stop loss, you will remove your stop loss, because you will think that this time also the candles may go down and turn around. But you see one thing, this time the candle is not going to turn around. It will be going, falling down, and you lost the entire capital. That is one thing in the side of stop loss. In the side of target, I will give you an example. You kept a target at a particular level. Okay, you are fixing a stop loss, a target at a particular level. This time the candle hit your target and you are out of the trade. After the trade, you are opening your computer or system after 1 hour. The candles have moved so long, it has moved very far away from your target. Next time your mind is thinking, oh, I have fixed a very small target. Next time I have to make it very big. The target should be doubled. I lost this run. I missed everything. My targets were very small. What you will do? You will keep a very big target this time. Psychology, I am telling, this time you are going to keep a better or big target. But your first analysis of 1:2 as 1:2 will work most of the time. What will it happen? Candles will move. The candles will move on the upside. Before reaching your new target, that is a big target, it will turn around and come and hit your stop loss. So always have a pre-plan and only try to execute that plan. Execution is important. Always traders tell plan a trade and trade the plan. That is, I won't say that is important. The execution, how you are able to execute it, that is very, very important. The next point I will say you, the next point which I am going to tell, the golden rule, your personality is much related to stock market. If you are an egoistic person, I won't compromise with anything. What I do is right. What I think is right. This is my analysis. The market has to go like that. If you think, or if you are an egoistic person like this, you can't win in the market. You can't be a successful trader. Market never rewards the egoistic person. It always is against the egoistic person. Next, if you are an inferiority complex person, oh, nothing will work for me, nothing will work, whatever I do, everything is a failure, nothing will work for me, nothing I can't do anything. If you are also not a capable person for the stock market trading. then who can do trading? You should be flexible. You should be flexible actually. You may have all seen one thing, Varambali. In Malayalam we say Varambali. During Onam time, two groups turn here and there pulling a rope, and both sides they will be pulling. One side there will be 10 people, other side there may be 10 people. They will pull a rope. Who is able to pull the opposition party, or who is able to drag them this side or that side, that party will win. This is called Varambali in Kerala. What we call Varambali in Kerala. Okay. But in stock market, you have determined a particular area where the candles are going to take support or resistance, or a price action may be created a particular area. At that area, you are not a participant of the Varambali. You should not be a participant. You should be a viewer. You should stand out of the area. You should see who is going to win, whether the buyer or seller. There are two types of people in the market. One, the buyer and the seller. As a trader, it is your responsibility to just watch the trade from outside. The junction is there and ahead. You are waiting for the candles to make some price action. Now you should keenly observe who is going to win. In Varambali, if the right side team is going to win, you should go with them and join. If the left side team is going to win, you should go and join with them. You can get a signal there, you know. At a particular moment, both of them are pulling rope, both of the groups are pulling rope here and there. At a particular point, you can get a signal, yes, these people are going to win. Who are on the right side are going to win, or these people who are in the left side are going to win. You can get a signal at a particular time. They will be pulling strongly here and there, but after few minutes or few time, you can get a clear signal who is going to win, a possibility of winning. There you should go and join. You should join the winning party. Thus, in trading also, in this particular level, you are watching, you are a viewer. You should stand outside whether the buyer or seller is going to win. If the seller is going to win, you have to go and short the market. You have to short the instrument. If the buyer is going to win, you have to go long. You have to buy the instrument. That's all. Simple. But you should be a viewer. You can't jump into the trade before getting the confirmation. That's very, very important. That is all. These are all the part of plan the trade. When we say plan the trade, these are the planning. What are the planning? How should we execute? That is what I am going to talk here. The next thing people say in stock market, don't trade with emotions. Keep all your emotions outside when you are trading. But a beginner or novice trader will not be able to control his emotions. What are the three emotions you know? Fear, greed and hope. These three emotions are in the stock market. These three emotions are very, very dangerous. Fear, greed and hope. Hope is the most dangerous emotion actually. This is also easy to be advised. Don't trade with the emotions. Keep your emotions apart. This is easy to be explained. It is very easy, but it does not come in reality. But because you are playing with real money, sometimes when positions go against you, if you are not maintaining proper stop loss and target and everything, you are not having a good system, your money will be vanished before your eyes. It will start melting before your eyes. You can't bear it. There you are, there you go to the emotion fear. If you are getting a beautiful chance, you think that it is the breakout trade. This trade will work. You forget everything, position sizing, everything. You jump into the trade for making huge money. There you are going with greed. When your stop loss is coming to be hit on the downside or upside, wherever you kept the stop loss, when the candles are coming and moving towards your stop loss, you are moving your stop loss again and not allowing the candles to hit your stop loss. There the emotion of hope is coming, which is very dangerous and pathetic actually, I say. You will lose your capital, every capital, if you are having the emotion hope. These three emotions, how we can keep it outside our trading system? No chance. It's by practice. That's why I am saying you have to work more on your psychological side. You should be a refined person. You should be actually a disciplined person. Your character is much related to the success of your trading career. You may be a finance graduate, you may be doctorate in finance, you may have studied big graduations, you may have a lot of degrees from very big universities, you may have MBA or finance from Cambridge University, but if you are having the feeling that I know everything, I have great knowledge in finance, and if you are having that type of feeling in your mind, and if you are sitting in front of the system for trading, you will fail. You have to be flexible. In market, you should be a viewer. Then the next thing, how can we achieve this? Always people talk about many problems nowadays. People talk about many big things, but they don't give any solutions actually. What is the solution? How can we how can we keep this fear, greed and hope apart? Nothing. You don't trade. I will say, if you want to trade, you should not trade for years. If you should not trade for months, you should just watch the chart. Watching the chart morning, evening, afternoon, whenever you get the time, you have to watch the chart. If you are trading in an instrument, you should be usual with the instrument. If you are trading in Nifty and Bank Nifty, you regularly watch the chart. No, don't take any trades. What are the chart movements? How are the chart patterns formed? What are the chart patterns formed when the market is in gap up? What are the chart patterns formed when the market is in gap down? What are the patterns formed in the sideways market? How the candles are behaving when the CPR is wide? How the candles are responding to virgin CPR? Narrow CPR, how it is working? Wide CPR, how it is working? How gap borders are working? You have to keenly watch how this demand and supply zones are working. Each and everything you must be watching continuously. I won't advise anyone to trade immediately. If you want to be a trader, if you are serious, definitely you have to watch the chart. You should know what is happening in the market. There are different type of trading style. One trading style might suit me, that might not suit you, because my personality, my character is some completely different from yours. So there are trading style for you. There are different type of trading style. Some are very aggressive trader. They can enter immediately and exit immediately. They become scalpers. They enter and exit within seconds. But a trader can't do it. Always place the stop loss in the system, not in your mind. Some people, oh, I kept the stop loss in my mind. If you are keeping in your mind, you will be shifting again and again. You won't accept the stop loss. So always place the stop loss. Even though if you are placing target or not, I won't bother about it. Your capital should be preserved. So always you have to keep the stop loss in the system. Okay, not in the mind. This is the next important golden rule. Never place the stop loss in your mind. You have to place the stop loss in the system. The next important golden rule, what I am saying, in trading hours, don't watch any social media. Twitter, Facebook or anything, WhatsApp, anything related to trading. Don't watch any social media, because you will have an assumption how the market is going, how the market is going to move, and you are going to take trade, or you have planned a trade in that view. Having that view, you have planned a trade. and you entered in the trade. Suppose you think you are short in Bank Nifty. You think Bank Nifty is going down because some news, worldwide news, today Bank Nifty is going to move down. Okay, you are having a clear picture. Or it is a gap up, okay, you think the gap up is not going to be sustained, definitely the Bank Nifty is going to move and you are ready to short after a particular area. After when the candles are penetrating the CPR and coming down, definitely I am going to short the Bank Nifty and I am going to keep the SL here. You have already planned the trade and you have executed the trade. When you are going to social media, some of your for some of the trader, so-called very famous trader, yeah, he is coming and saying Bank Nifty is going to reverse and I am long in the trade. Your mind is totally confused. Your assumption is confused. The view which you have taken already will be completely turned over by this, what we say, this message in the social media. So always avoid social media in the trading hours. I don't also watch pre-market report. Some famous traders give pre-market report. I don't go for pre-market report. You just want to analyze the world market. Go to SGX Nifty, see the position. Go to Dow Futures, see the position. Always Indian market responds to SGX Nifty. If there is a gap up in SGX Nifty, definitely here also there will be a gap up. More or less our Nifty will be opening in the range of SGX Nifty. According to the same pattern, here also the patterns are formed. We are more, SGX Nifty is more dependent on Dow Futures. So we want to follow as a mother market, we always should follow Dow Futures, then SGX Nifty before the trade opens. That's enough actually. Then in particular in event days, election results or any other budget days or finance minister's talk, definitely you can't find any price action there. There will be rapid and fast movements. There will be many other strategies which we can follow on that particular days, like long strangle, long straddle. We have a lot of strategies to be taken in that particular day. When to take, how many days before we have to take, how will be the increased volatility at that period. That's all different subject. That's why I'm saying stock market is complicated. So you just always believe in your system. Then some people go beyond costly systems, costly indicators. Some traders sell indicators, 20,000 rupees, 25,000 rupees, course, 50,000 rupees, 1 lakh rupees, 2 lakh rupees. So some people, novice traders, think, oh, this is very costly and it will be effective. If you think like that, you are going to lose your money. What is costly is not working here. Only simple things with proper risk reward, money management, position sizing, a little bit of psychological adjustments, that's enough to be a successful trader in stock market. Not big strategies. One of the famous guy, I think he's having a Twitter account and he named on indicator. I don't remember the indicator, something very different indicator. He told that he's going to extract some gamma effect and scalping through gamma effect, like this line, like that. We can't understand the indicator, we can't understand the sophisticated language. They think by using this sophisticated language they can correct most of the people. It happens, most of the people are going beyond them. That is the fact actually. So always believe in simple things. Simple things will happen in market. Simple things is successful in market. And it works very well. Simple things work in market. Your mind should accept simple things. If you are an option buyer, go for breakouts like that, some patterns like that. If you are a seller, go through some strategies. Sometimes you may be doing iron condors or strangles or straddles, anything. Stick on to it with proper risk reward, money management, position sizing. That's enough. This is all about trading. Confidence comes in trading when you are having proper knowledge. Without proper knowledge, you can't get confidence. So we have to acquire knowledge. Each and every day, keep on studying, keep on working, keep on back testing. That what I say. Do, if you are doing strategies, some option strategies, you have a lot of softwares for back testing. Otherwise, if you are a chartist or if you are trading using patterns, do manual backtesting. Backtesting will give a lot of confidence. Actually, it will change your psychology because backtesting works. That's what backtesting gives you a lot of knowledge. Knowledge gives you confidence. So we have to acquire knowledge through backtesting. Okay, that knowledge will give you confidence. That's very important in trading. We have to think differently in stock market. From our childhood, we have heard you should work hard for your success. You should work hard for success. But in stock market, it is completely upside down. You should not work hard in stock market. You should work smart. You don't work in stock market. You just stay behind without entering the trade. Just select only few trades. You just stay like a monk. Just watch the market. Don't enter the trades. Don't join the market. Just be a viewer. Okay, here hard working does not work. Don't take trades from 9:15 to 3:15. Only the broker will earn money, you won't earn money. You should just wait like a leopard. A leopard is waiting calm, quiet till the prey comes near it. Immediately when it gets the chance, jumps and catches the prey. That should be our mindset. A trader should have that type of mindset. Fixed, no problem, everything is fixed. I am going to trade only if the candle is penetrating and closing below this line. Nor I am not going to trade. If the candle is not closing below the line, I am not going to take the trade. If it misses, if the candle becomes too long, I am not going to enter. I want a retest. I want some discounts. And everything is pre-planned. And only after the plan, you can enter the trade. So this is all related to psychology. Again and again, I am using this word psychology because trading is psychology. This next thing I will say is very important, maintaining a trading journal. Most of the traders tell to maintain a trading journal. But you see, I use a diary here. Each and every trade which I take, I write here. I write in this diary which trade I took, which day I took, and everything I write in this diary. Because each and every point, I entered a trade here, what was my emotion, what was my feeling, when the stop loss hit, how did I feel, when the target hit, how did it feel, when the trade touched my stop loss and then reversed and gone in my direction, how was my mind, what was my position sizing, how many lots I traded here, what was my stop loss, how big my target was, what were the patterns formed here. Everything you have to write it. You should write it like a diary, own diary, and refer weekly once. Weekly once you have to take the chart, keep your diary nearby. You have to compare both. History always repeats. We say history always repeats. The pattern also repeats. If you are familiar with the chart, I will be teaching the chart pattern afterwards one by one. I will come to it, no problem. Because I am not teaching it because this is not important. Chart, more than chart pattern, psychology is important. You have to know chart pattern. Many people are teaching different type of chart pattern. I have my own style of teaching chart pattern. That is a different subject. Keep it apart. You have to more work on this. Psychologically we have to more work. Therefore, trading journal is very, very important and it should be maintained properly. Okay, even if the trade is failed, if the stop loss is hit, you must go and analyze. What was the mistake behind this? Why the trade turned around, hit my stop loss? If you got profit also, okay, go and analyze it. Was it the right target? How can the target be fixed? Were there any mistakes? The candle came near my target, then turn around. It didn't touch my target. Why? What is the reason? If you are trading in Nifty and Bank Nifty, both of chart always moves in tandem. Sometimes the Bank Nifty will be reaching the point, reaching the target. But if the Nifty is facing the resistance, it will turn around. Most of the time I will show in a different video. I will be comparing both of chart and why I use Nifty, Bank Nifty, everything I will be discussing detail in video. So we should write all the reasons which we should write all the emotions which coming in our mind. We should take it down and prepare the trading channel. This is how we have to prepare. Some people make some, what we say, Excel sheet. How many lots I took, how many in which time I entered, what was the entry point, exit point. I will tell you to write a diary. Writing a diary is better than preparing something in Excel sheet. It is instrumental. This is actually our emotions. So try to what we say, write our emotions. What was the feeling? What was the feeling after the trade? What was the feeling before the trade? What was the feeling when we were in the trade? Okay, write all the feelings. Thus, if you practice this regularly, definitely you can control your mind. If you are able to control your mind, the fear, greed, hope, all the emotions you can keep apart of the trading system. If you are able to keep these three emotions apart of the trading system, apart from the trading system, definitely you are going to be a successful trader. That's simple. That is simple. That's why I am saying trading is simple. But traders, YouTubers, and many people who are teaching courses have made it very complicated. They have made it complicated. So the newcomers, they don't know. They go here, they go there, they study something from one guy, they study some other thing from other guy. So it will take time. It is not a simple thing, because in trading also, we have different style. Some people are option buyers, some people are option sellers, some people trade fully in derivative market, some people trade in stocks. Trading in stock and trading in derivative market is completely different. Some people trade in commodity market. So friends, I am not going to number 7 golden rules, 9 golden rules. What I told you, everything is important for trading. We can't miss anything, Everything is important for trading. We have to work more on the strategy we are doing. We have to work more on backtesting. We have to work more on the SL and target. We have to work more on the psychological side. We have to work more on the emotions. We have to work more on the trading journal, how we are doing trading and everything. We have to work on all the things. Okay, these are all important things. If you want, you can take notes in a chart paper, stick it in a place where you are trading. Always see, these are the golden rules. These are the rules which I have to follow. I have to work on it. If I am not able to obey these rules, I am out of the market. Trading is not suitable for everyone. Again and again repeatedly say, don't want to trade. Everyone don't want to be a trader. Why we come into trade? If you are not interested, if you are only oriented, income oriented, if you want to double your money, triple your money, get a lot of money, earn a lot of money, if you want, or if you are thinking like that, you are not suitable for trading actually. If you are really passionate about trading, you can enter stock market, you can work on it, you can study on it. Definitely, when you study and follow all these golden rules, your psychological level already will be improved, your psychological level will improve, and you can become a good trader. Let's all learn more, earn more. This is John Kingston signing off from JR Trading Zone. Bye.